we've got Opendoor Tech. Now, if you're in real estate and you all of a sudden have this idea that, well, it sure sounds like Chair Powell and the Fed has got this thing all wrapped up and they're going to give us a cut in September, that's not a bad thing. And that is one of the segments of the market that really started to rip. Opendoor Tech really started to rip. Today, it's up another 3.5%. It's been running pretty nicely, Mark. This is the music to the ears of the folks that are in this particular space. And it is something that a lot of people have been waiting for. Now, that all being said, we've already seen, when you look at real estate, we've already seen mortgages come down significantly. We're at the lowest levels we've been in like 16 months or something like that. So the combination of that and obviously the Fed and that what they're in, basically telling us they're going to do, this is a name that's probably got a little more room behind it, because I think we start seeing a few more transactions, because that definitely, when those rates were high, those transactions were low. And now that we're getting a little bit better, maybe we're going to see those transactions start to go back up.
Well, and listen, I'm loving the bull bear thing we got going on today, Pete. We usually agree on most things, but today we got a few that we've got some market divergence, as we say in the trading.
It's all good.
I'm not with you on this one. I mean, look, what is 35 basis points? Assuming we get 35, what does it do, right? Mm-hmm. I mean, yeah, we're down from that 7.7 average. Definitely a good thing, but you still have existing home turnover at a historic low, right? Since we've been tracking that, we have not seen this level of no activity, right? In terms of existing homes, anything that's going to come is going to come from the new home sales. We can't make enough to keep up with the demand. And at the end of the day, 25 or 35 basis points ain't going to move the needle more than what on a monthly mortgage, right? On average, somebody did the math. I forget exactly what it was, but we're talking like 175 to 125 bucks on average. Is that going to be enough to suddenly open the floodgates to the real estate market? I say no. I actually think that what's going to happen is sellers, in anticipation of that floodgate opening that I don't see happening with this small of a cut, they're going to raise prices. Okay, like big time raise prices, and that's going to put further pressure on what has already been a broken real estate market in this country. So I'm taking the bear case on this one, Pete.
Well, I want to just remind you one thing, though. When you look at Opendoor, take a look. It's got about a 12 to 14% short interest, which means, maybe a short squeeze if this thing starts to run a little bit. The run might actually go a little further than either of us might think. Guardian Health. Oh, go ahead.
Certainly, before you pass that one, Pete, we got to take a little victory lap for our friends in the pit, right? We did have on the 19th of this month some rather significant bullish call buying activity in this name. They bought 5,000 of the August 23 at a 2 handle. So if you got that one, you got in on it, kudos to you. That's part of why we do at Marc Rebellion. I say take those profits. Pete might say take some of the profit and play with the house's money. We'll see who's right.
Take at least a chunk off, but make sure that you're always disciplined. That's what we talk about all the time to our own guys and anybody else. It's all about discipline and taking some off at least, if not all, to your point.
Right.